Welcome to the AAA Storage Podcast, your integrated real estate and development partner exploring all things self-storage investing to bring you diversified success. Let's dive in. Hello, and welcome back to another episode of the AAA Storage Podcast. I have again with me Paul Bennett, Managing Director of AAA Storage, and you have 30 years, 40 years experience in the storage industry and real estate in general and investing. I know you've got a lot of expertise, and we drug some of that out in the first episode. In the first episode, we talked about why invest in self-storage and in real estate. We talked a lot about the mechanics and things that you guys are thinking about when you're analyzing deals and why self-storage is such a great asset to own within the real estate class. Now, what I want to get your insight on this week is, what do I do? So, okay, I agree with you, let's say, from episode 1, that self-storage is, in fact, a great investment, and there are different ways to get involved in that investment. Paul, what would you recommend? You've got a high net worth individual who's interested in investing in self-storage. Where do you start? Where do you go? What would you point them to? Would you give them recommendation, wisdom, that sort of thing?
Okay, good, Brandon. So let's start. There are a lot of people, and in particular, a lot of high net worth individuals that invest in real estate. And when they do it directly on their own, it's typically in residential real estate. We all know 10 people that are either buying rental houses and renting them or buying and flipping houses. Once you cross over out of that sort of segment of the market into true commercial real estate, whether it's self-storage or, office industrial flex or retail or office, you're generally getting into an area where, number one, there's a lot more capital required. And number two, the markets are more sophisticated in terms of understanding what the value of a property is or isn't and what its future might look like. Typically, when people cross over from doing residential real estate, rental houses and that type of thing, they will look to partner with a sponsor. The whole reason that a fund vehicle as a concept was created was to give investors a couple of different advantages that they don't have on their own. First and foremost, it allows them to combine their capital with other investors, which allows them greater diversity and sort of spreading risk around. The average self-storage facility costs $5 to $8 million to build. Even if you're a very wealthy high net worth individual, you probably would be limited to maybe doing one project. So you've got all your eggs in that one basket. The second benefit that you get from a fund is, particularly if you pick the right sponsor, is getting somebody with experience in that asset class that's focused on it on a full-time basis and hopefully has a track record that sort of indicates that their likelihood of success is greater than yours would be on your own. And so those are the two principal benefits of investing with a sponsor in a fund vehicle. And then lastly, not only are you diversifying by leveraging other investors' capital who are investing alongside you, but typically a fund, like in the case of our Growth Fund 1, is invested in 8 different properties. It's actually a total of about $80 million worth of real estate that an investor who invests in the fund today can spread across $80 million of capital and 8 different projects with a simple $100,000 investment. So those are the real key benefits, if you will, to investing via a fund vehicle. The other alternative are single property investment vehicles, where you have a sponsor, a smaller group of investors that's invested in one property. And that's what we did for more than 30 years. But we went to the fund model because it provides greater diversity across those dollars deployed for our investors in the fund.
That's great. So if I'm tracking with you, you have a high net worth individual, probably several $1 million to put to work somehow, and they've got 401k, IRA, different vehicles that they can invest their money. They want to pick real estate, and a lot of people pick up homes or do flipping, things like that. But if you want to get into commercial, if you do it yourself, it's very expensive, lots of money. And if you want to pool together funds, it's very complicated. But it's better to go with a sponsor because you get diversification of your assets and things like that. But you also get the expertise that I know a firm like yours would bring to the table. There's a lot of things to analyze. So what kinds of things are you doing on behalf of an investor like that when you're thinking about building self-storage. So what I mean by that is, what does it look like to engage a firm? Not necessarily your firm maybe, but what are some things that I should be looking out for? What are some things that would come with investing in a firm that I should be aware of? Anything like that?
To invest in a passive environment, a fund or a single property deal, how do you do your due diligence?
Yeah.
What are the things you want to know and understand, both about the sponsor and the opportunity, that will help you make better decisions?
Said it better than I could say it.
So I think it starts first and foremost with the sponsor. What is their longevity? What is their history? What is their track record? The old saying is past performance is the best indicator of future performance. So I think really understanding the sponsor and the strategy of the particular investment that you're looking at. For example, our focus, our strategy is to really grow people's equity. We are not an income-oriented investment in terms of monthly or quarterly dividends. So it sort of starts with determining what your investment objectives are. And does the opportunity meet those objectives? If you're near retirement or at retirement and you're really investing for income, our growth fund probably isn't the ideal vehicle for you, because we're not going to distribute cash on a regular basis. We're doing ground up development, and we're going to sell those properties and distribute lumps of cash as the fund exits each property. So I think your own investment philosophy and requirements, combined with understanding the sponsor, do they have a track record? Do they have the experience and expertise? Are the first two steps in that process. Once you've cleared those, okay, the opportunity appears to meet my investment objectives, and the sponsor's track record is, if not impressive, at least solid. Then it gets down to looking at the individual opportunity. What markets are they investing in? What is their overall strategy? What is the supply and demand balance in those markets? What's the assumption? What are the key assumptions that drive the investment returns? For example, in our world, we're developers. We're looking at the value that we can create in the development process. If you're investing in a fund or a vehicle that's acquiring existing facilities, what are their projections in terms of rate growth and occupancy? And do the dynamics in that market support those assumptions? Sort of doing a reasonableness check, if you will, to make sure that the underlying assumptions that they predicated their projected returns on are realistic and achievable.
And this information, I understand, is in a prospectus. Like if you work with a firm, they've got a fund, they're going to have a report basically on their assumptions and where they're kind of trying to go with the fund. Is that the way to understand this information?
Yeah. And forgive me if I kind of leapt over that. Maybe I just assumed people understood that. But yeah, so no conversation, including this one, if we were trying to give you information about our fund, is ever complete enough to really give you all the information that you need. And a one-page or four-page summary of an opportunity is great to kind of those early stage parts of the process. Do I like the sponsor? Do I like the track record? Does the strategy match my investment objectives? Can be accomplished in a four-page summary. But beyond that, the things I was talking about just a minute ago are really found in the offering memorandum, the private placement memorandum, or PPM as it's referred to. Typically, an entity like this would be structured as an LLC in today's world, and there's an LLC agreement that would have some pretty practical information in it in terms of governance and how some of the really specific aspects of that entity are going to operate over time. So once you sort of pass the initial phase of, yeah, this seems to line up with something that makes sense for me, then you really have to dig into the private placement memorandum and the LLCA to get to the nitty-gritty details. And then behind that, I strongly suggest before you make the decision to invest that you schedule a call with a sponsor so that you get to meet them face-to-face, you get a feel for how responsive they are. And in that call, you need to have some well-thought-out questions, maybe areas of the private placement memorandum that you didn't fully understand, or maybe there's information that wasn't disclosed in the PPM that you'd like to know. For example, we have a secure data room to support our fund, and when we have investors who want to dig a little deeper, for example, they want to see the underwriting on each of the properties, and they want to see the pro formas and the assumptions in those pro formas. We don't send those out to folks, but we have them in a secure data room. We provide them with a login. They can go into that data room and study that data and then come back with questions for us. If somebody won't share that level of information, that would be a red flag for me. But digging as deep as your expertise and interest will allow you to. And even I've had multiple situations over the years where someone's personal attorney or CPA might engage, depending on how much you're investing and the process you want to run. You can certainly engage your CPA or attorney to look at the legal documents and the financial projections to kind of give you some third-party comfort that they're within reasonable bounds and seem to make sense.
Yeah, I was going to ask, let's say you get all this information and somebody is not a financial expert, but they have capital that they'd like to invest. Do you see folks take that data and go to their financial advisor, their CPA or attorney or whatever, and kind of vet it? I'm just wondering, how does somebody make sure that they know what they're getting themselves into, I guess is the question. But you answer that. That's
the other thing that we do, I can't tell you right now off the top of my head how many investors we have in the current fund. It's north of 100. I've talked personally with every one of them at one point or another. And we pride ourselves on offering a call to everybody that has interest and spending the time to answer any questions they have. And in some cases, educating them because they don't understand something. Obviously, there's a conflict or potentially a conflict of interest there. So it's always a great idea if you've got an advisor, whether it's an investment advisor, CPA, attorney, or a close friend that may have more financial acumen than you do. It's never a bad idea to get their opinion. We try to provide as much information as somebody would want to look at and give them as many opportunities as they'd like to get questions answered or get additional information.
I love that. I love that. That's so important. Okay, so you're looking for these firms, you're understanding their track record, you're understanding where they're investing, why they're investing, and then the next step is really do reach out to the team and try to find if this is a good fit. Because if you are investing that amount of money, it's good to know that even relationally there's a good fit. So once you get started, what is that process? Like if I go to AAAStorageInvestments.com right now and I get in touch with your team, we talk through it, what does the next 30 to 90 days look like? And I know this isn't supposed to be a hard pitch for AAA. You guys do fantastic work, but I want people to know what the process looks like. What does it look like? Do I get statements? Is there quarterly reports and that sort of thing?
Yeah, so I'll get real granular for you. Let's just say that you contacted us, you went through the process that we've just talked about, and at whatever level you need to have comfort, you make the decision to invest. Obviously, before you made that decision, we've provided you with a copy of the offering memorandum and you've had a chance to review it. At that point, for AAA Storage, we have a secure online subscription portal. Andrew Froh, our head of investor relations, would send you a link, an invite to that portal. You would log in, and all the documentation that you need to complete to subscribe to the fund would be there. You do it all online, sign it electronically, and then we'll send you a capital call notice. And within 2 weeks of receipt of that notice, your capital has to be wired into the fund's account. So now you're officially an investor. You've been admitted into the fund as an investor. From there, we also have an investor portal. It's a secure portal, and all of the information related to the fund will be posted in your portal and you'll get an email notice. For example, we do a quarterly update on the fund, property by property, and I sort of do a little discussion about the capital markets in general, and then the self-storage and office industrial flex markets in particular, and then go through each property, where it is in its development process, if it's in lease up, what's the occupancy, how are things going, and we send that out on a quarterly basis. In addition, you're going to get an annual K1, which is reporting your share of the income and loss from the investment. That will be placed in your investment portal and you'll get a notification. The fund publishes its financial statements every quarter. Those are posted in the investor portal. And then at the end of the year, the fund is audited by Cherry Beckert and Holland. And those audited financials are posted in the investor portal as well. So everything moves through the investor portal. You can download it. It's saved there for you, so you don't have to download it. But you can download and save on your own PC or laptop any of those documents or information that you want. But the investor portal really serves as our key communication link once somebody's in the fund and we go through the process.
Okay. Very, very helpful. Thank you. That paints a picture of what this process looks like. Because the point is, again, you agree to, self-storage is a great investment. Now what? And I think you've given us such clarity on that process for anybody involved. And there's going to be a ton of information on our website, frequently asked questions, things like that to help people understand, wrap their minds around why this is such a great firm to work with. So thank you, Paul, for that. And I would encourage anybody listening to reach out to the AAA Storage team on social media, on the website, and this is a great team to talk to. We won't get so granular in the process and things like that about AAA, but I really wanted to get people wrap their minds around what it looks like. From here, we're going to be talking much more about market trends and future trends, things like that you guys have stored up in your big brains. I'm glad you told us about that. So thanks, Paul.
Yeah, enjoyed it, Brandon. Hopefully I don't know that I sequenced everything perfectly in the very beginning when you sort of asked me about the investment decision process, but it's pretty logical. If you're going to buy something that's relatively expensive, so it's getting an important allocation of your personal capital, you're going to do some research to make sure you're buying the best one from the best manufacturer, and it's going to meet your objectives. And looking at a real estate investment at the end of the day really isn't a whole lot different than that. So
that's perfect. Well, thank you so much, Paul. I'm excited to get to the next episode next week, and hopefully you're not drowning in too much snow at the moment. We will see you next week. Thanks so much, Paul.
You got it, Brandon.